Welcome back. Let's shift our attention now to the earnings season. Now, UCO Bank saw its net interest income, NII, surge by 20% and profits went up 50% on a year-on-year basis. But the slippages also went up very sharply, close to about 80% on a quarter-on-quarter basis. To talk about the way forward, Ashwani Kumar, MD and CEO at UCO Bank, is now with us on the show. Thank you very much, sir, for joining in. First, if you could talk about your slippages. Slippages up 80% quarter on quarter and now stand at 864 crore. Is this what led to this increase? Some more color on which segments? And what would be the slippages going forward for Q3 and Q4, where you would have some visibility? Will it be at similar levels or can we expect a moderation?
Thank you for having me on the show. Just to give you a flavor about the slippages during this quarter, let me tell you that during this quarter, we had one large corporate account which turned NPA, having an exposure of around 245 crore. That led to elevated slippages plus some agriculture impact, because in September quarter, agriculture slippages are on a little bit on the higher side every year. So these are the two main reasons which led to slippages increase. And one more thing, that the account which led to slippage in corporate segment, we have already provided for 50% as a provision against that account. And going forward, I expect that the slippages will be in the normal range, which were there in the previous quarters, less than 500 crore. And it will not be elevated to the level which is seen in this quarter.
Mr. Kumar, good morning. Thank you for joining in. You said you provided for 50% of the account that recently slipped into an NPA. But what about the remaining 50%? When do you expect to provide that for? And part two of my question is, there was a massive write-off as well during this quarter. Why have recoveries been on the lower side this time around?
The remaining amount we will be providing in the normal course of business, maybe in the next quarter and going forward. And so far as the recoveries are concerned, we had total recoveries of more than 900 crore. Major recoveries were in the write-off accounts also. So total recoveries put together were more than 900 crore from the various accounts in this quarter. And the slippages were, I told you, in the main account, one main account was there. And going forward, we expect that the slippages we will contain and the recovery and upgradation will improve next quarter onwards.
Do you have a gross NPA number which you could end the year with?
Our target is that we'll be ending with less than 6,000 crore gross NPA. This is what the guidance we have given at the beginning of the year.
Okay. So 6,300 crore was the gross NPA in the current quarter. Will come down to below 6,000 on a quarterly run rate by Q4 end. Okay. What about, sir, on the deposit growth? Because your CD ratio is fairly comfortable, 70% lower than many of the peers. What are you targeting by way of advances growth and deposit growth for the current year?
The current year, we have given a guidance of 8 to 10% of deposit growth. And during this quarter, we clocked a deposit growth of 10.57%. And advances growth, we have achieved 18%, though the target we have targeted is 12 to 14%. But to achieve CD ratio of 15%, I think 75%, I am sure that with the deposit growth of 8 to 10%, we'll be able to achieve 75% of CD ratio by this year. And we are using our TAPS market, excess SLR securities, to raise funds from the market, so that once we achieve 75%, then we will have another round of deposit raising aggressive plans also.
Would you look to increase your advances growth? Because it's currently higher than what your guidance is.
Yeah, our guidance continues to remain the same. But even if the opportunity is there where we get a profitable business opportunity to lend at a reasonable margins, then we will improve our guidance also. But currently, we continue to have our guidance of 12 to 14%.
One final question from my end, Mr. Kumar. What was the margins, the net interest margins you had during this quarter, and what do you expect to end the year with? And if I can add one more question to that as well, which is not related to NIMs, but you have many accounts which are currently at the NCLT. What kind of recovery do you expect from those in the next 6 to 12 months?
Currently, this quarter, we recovered around 400 crore from accounts through NCLT. And next quarter, there are certain resolutions in pipeline and certain liquidations are also in pipeline. We expect a good amount of recovery, but exact numbers, it will not be possible for me to give until unless we get a resolution plan and everything on table. Second thing you asked about the credit growth. I already talked about credit growth. 12 to 14% of credit growth we will be making in the next quarter. NIM, we have improved our NIM. A year back, our NIM was 2.84%, and now we have reached a global NIM of 3.10%, and domestic NIM of 3.26%, 3.30%. And NIM is aided by our increase in NI also, well supported by our